In a country, you need to have prominence of the law in practice rather than getting into anti-money laundering and all these aspects. Before that, you need to have a very good, sound, common the law in place.
If you look at the successful financial hubs in the world, you will see that the country itself is doing well. I beg to differ that it's difficult to ring fence.
I understand the country is going through challenging times. With an IMF program coming on board, the question is fiscal consolidation versus economic growth. We have to strike the right balance.
Hi everyone, and welcome to another episode of our interview series, Shared Values, partnering with Reshape Europe 2022. The Friedrich Naumann Foundation for Freedom, Sri Lanka office, in partnership with Economy Next, has put together this wonderful interview series where we discuss, we analyze what are the shared values that the EU has with Sri Lanka. And then we see how can we build on those shared values to make sure that we create prosperity for Sri Lanka. So one of the key areas we've identified as being successful in the EU is in terms of having very prudent financial regulations and governance. And it has made Europe stable and successful, and I think we can work on that as well. Sri Lanka itself, through our port city, is looking at creating us becoming a financial hub for South Asia. And South Asia really doesn't have one. And it's a massive opportunity for us. But as you know, with any hub, we need to have robust financial regulations to create the kind of conditions that brings trust and confidence, and therefore brings in the investors and depositors as well, and also the financial institutions to be based here. I'm truly delighted to have three wonderful, very experienced personalities to discuss this issue further. Joining me is Arunigura Tilaka, the chairperson of HNB, one of the largest private banks in Sri Lanka. Mr. Nandika Buddhipala, who is the CFO of Commercial Bank, basically the other largest private bank in Sri Lanka. And also Thulci Aluwihare, who is the Deputy Managing Director of Port City Colombo. Welcome to all of you. I'm going to start with you, Thulci, because I think the Port City is in a lot of focus. I know that the banking regulations are not really ready yet, but surely you have mapped this against international standards. And unlike, we've been reading a lot in the international media, all sorts of speculation. It will be a regulation light area, anything will go. But I'm sure that we are looking at a much more responsible kind of center as well. Can you elaborate on what kind of principles that will guide the regulation in the port city?
Yeah, thank you, Imran. Quite a pertinent question. See, what we have to realize is there are many IFCs in the world have failed, then succeeded. And light touch regulations is a thing of the past. And I think you said two things, confidence and trust. For international banks to come and set up in Port City, we need to have really robust, progressive and independent regulation and a regulator to suit the needs of the market. Now, in that sense, so our existing AML, anti-money laundering laws, then CTF, counter-terrorism financing laws, all is applicable within Port City. And the FIU of the central bank has jurisdiction within Port City, and we will have to be also compliant with Basel and FATF recommendations. So the question is, however, with the type of products or sophistication of financial products within Port City that would be on offer, whether some of these AML regulations especially would need to be relooked at to make sure if there was a breach, these can be identified, and also to ensure that the FIU within the central bank has the capacity to identify, detect, if at all, and obviously enforce. So nowhere, contrary to some of these comments, nowhere in the Port City Economic Commission Act it says that the existing AML or CTF rules or any other rules which is applicable within the country is not applicable within. Nowhere it says that. So by default it is applicable. But however, what I want to more emphasize is that, as you correctly said, suitable regulations to suit the current context and what is on offer is important. Because, let me give you an example. So globally, internationally, banks look for more principles-based regulations, rules, whereas we are at the moment mostly operating on rules-based. So they look for a jurisdiction whether we are familiar with. Advantage is that we are a common law jurisdiction.
Yes.
But new laws needs to be drafted under principle-based regulation. The question is, probably both of you can answer later, is that under the existing Banking Act of 1988, can these progressive regulations can be drafted? For Port City, regulations will be drafted under the Port City Economic Commission Act, which means that we really have almost a blank canvas to draft regulations that will suit the market, and these regulations should be principle-based.
Absolutely. And also, I think the banking license are issued by the Central Bank of Sri Lanka.
Licensing process is still the Central Bank Monetary Board happens. It's just the regulation, banking regulations can be drafted in the Port City Economic Commission Act so that you will not be limited or restrictive by an old act of 1988. So that's a huge advantage, and I believe that the Port City proposition should not be to appeal to everyone.
Absolutely.
And offer every product. We need to try and understand, look, there are enough IFCs in the region. What is our value proposition? And then obviously the regulation drafting also should be a bit more market driven to test the waters, and because we have the opportunity, and then draft regulation rather than draft regulations and go to market to realize it is a bit disjointed or, not.
How much will the Port City be integrated with the general economy of the country? So the example I'm just mentally thinking of is what happened with Labuan, right? That was not fully integrated with Malaysia versus, say, say Hong Kong, which is the entire territory is one effective thing. How you're looking at, is there integration?
So like Singapore, Hong Kong, as you quietly said, they are an IFC itself, but those have taken half a century to really evolve. A good example is DIFC, which is a ring-fenced an IFC, which was a success story within 10-15 years. So Port City is a multi-services special economic zone. Financial services would be one aspect of it, and it is ring-fenced in sense, right? However, in order to get the benefits for outside Port City in Sri Lanka, the question is, how does that happen? Is purely from supply chain. Because any goods or services supplied to Port City from Sri Lanka is deemed export. And you get remunerated in foreign currency. And at the moment you also see so many people leave Sri Lanka for better opportunity. But within Port City, if we are successful to attract some of the large international banks, multinational companies to come and set up, there will be great employment opportunity created, and all of these employees will be remunerated in foreign currency. And people like yourself, Imran, have spoken to many Sri Lankans who are overseas. If you create the right economic environment, they will be willing to return.
Absolutely. I completely agree with you. Aruni, just come to you now. You've been in financial services for 25 years, and also a large part of it has been also outside Sri Lanka. How do you rate our regulatory regime in terms, with regional regimes, and where can be improved?
Yeah. So I will link it to the Port City, to the financial center or the hub we want to create. So I fully agree with Thulci that it has to be principles based, and I fully agree there has to be trust, there has to be confidence. So these are critical things, because if you look at the successful financial hubs in the world, right, like London, New York, Hong Kong, Singapore, or Dubai, you will see that the country itself is doing well. So what I'm saying is Thulci's job just got harder because of the situation in Sri Lanka, right? So I beg to differ that you cannot, it's difficult to ring fence, because who is going to now come into this Port City financial hub when they know the precarious situation the country has got itself into? So ultimately, though you are trying to ring fence it, it's very much a part of that country. So if you look at the regulation, I think the regulation is pretty good, because the banking regulation, we've emulated Singapore, India. So the regulation in terms of, are we doing things the way we are supposed to do globally in terms of Basel III or AML regulation, all that is followed, right? But it's just that what gets us into trouble, the broader economy, because so currently the regulation has to change based on the economy. As you would say, we have now had to make it a closed economy and tighten the regulation by central bank because of the economic situation. Absolutely. Right? So there is now, in order to be a hub, you can't have no trade. Absolutely. We are breaching all the WTO rules. We are not trade friendly. Our economic growth is now negative. So in terms of ICT and technology growth, now it's going to take a back seat because we don't have investment, innovation. All these things are features of a financial hub. So currently, I would say it's virtually impossible because we've closed our trade windows. We can't import anything. We don't have liquidity. Absolutely. So any foreign investor coming into even the port city will look at how is this country. We're operating somehow in this country, right? Though it's supposed to be ring fenced, but we are ultimately in the country. Is there liquidity for us to get out? Is there confidence? Is there political stability? Is there especially in banking, are there current account restrictions? You can't get money out to and fro from, or are there capital restrictions? Is there transparency in your financial mechanism, exchange rate? Is there transparency in fixing the exchange rate? Right? Because say investor comes in, he can't even book forward or he can't do anything. Absolutely. Because this is ad hoc decision making, right? It's all due to, in all fairness, it's not the financial services or the central bank, it's due to the country situation. Absolutely. So I think the enablers are the business environment has to be good, the political stability, the economic stability, with the taxation and the cost structure, all that has to be conducive for anybody to come in. Then there has to be the human capital, as you mentioned, the flexibility of the labor force and the legal aspects of labor. Do we have diversity in labor? Do we have an international community? Absolutely. Because if you want to be an international hub, you have to have international people. Absolutely. Right? Yes. And if you want to be a successful international hub, you have to have successful people want to be in a successful place. Absolutely. And the financial sector has to be open. The financial regulation has to be open in every sense, whether it's trade, money flowing out and in, liquidity, stock exchanges. All these are restricted. Absolutely. So all that has to happen. Absolutely. So I think right now it is very, very challenging. But if we come out of this and get all the reforms right, then I think it's a good opportunity because we haven't been able to do it all this time. Yes. Now I think crisis is good. So a lot of things. Yes. Yeah, I agreed. I was just checking a headline on Bloomberg. I think it's the other day that was the association that represents banks in London are warning the government of UK that London risks being relegated to a regional, not even a regional hub, but just one of the domestic markets of one of the countries in Europe. And that's for London, that's a dramatic fall because it is not an international city anymore. I think we can explore the macro environment a little bit later, but Ms. Bipal, this issue of our regulations, right? And Thulci mentioned that, and I already mentioned that. And I still want to dig that more into that in terms of yes, we may have robust laws
But it comes to implementation, and that's why international bodies look at us, right? A good classic example is we have very good, KYC and anti-money laundering laws, but you see our own media talk about drug lords having so much money accounts, and it stuns me that they are able to get away with opening and then maintaining such large accounts, and nothing happens. And so you cannot imagine how the international investor will look at it, because that's an implementation problem, right? It's not really, I don't think any bank would willingly let a drug lord have so much money, purely an implementation issue. How would we tackle our implementation?
Thanks, Imran. I think it's a bit of a contentious issue. Now, when we look at maybe the genesis of some of these KYC, then there again, even when we look at the combating the terrorist financing, maybe that would have started when you look at just beyond maybe the Europe, US, they started somewhere in 71. Then when it came to somewhere 80s, they have developed so many other the infrastructure, low beyond KYC and others. And one of the prominent issue, what I can think of, maybe two. One is specifically in a country you need to have prominence of the law in practice, rather than getting into maybe the anti-money laundering and all these aspects. Before that, you need to have a very good, sound, common the law in place. When we look at maybe some of the other markets, okay, of course, there can be kind of loopholes even in the developed markets, but far more the implementation of the law in the country is pretty much there. Would like to maybe deviate a bit when it comes to the financial system and the correlation between the law and finance. I think late 90s, we normally quote this particular example of the research running into about 40 countries, the research that they've done. The Harvard, the Laporta, Raphael, and the Lopez and all that. It's very, very prominent research where they say implementation of the law of any country is going to be extremely important for any other matter, specifically for the finance. For finance to develop in a country, you need to have that. So I'm not going to deliberate pretty much on the issues, but you can understand when you have all the anti-money laundering and combating terrorism and all these kind of financing, you create everything and you put it to the central bank to implement. Can they do that like that? So we are living in a different environment altogether. All the other the muscle, all the other supportive elements, common law, as I think Thulci also very well mentioned. Even some of the research, they say the interest of the investor is very well taken care of under common law. We are supposed to be having common law, whether we do it right, whether we implement it right, whether we can see examples. When you talk about maybe a certain amount of money, when somebody is getting highlighted having that amount of money, how long it is going to take to resolve the issues as far as in the courts. Absolutely. We have so many other kind of issues. One thing is that maybe the other issue is the evolution of these concepts over a period of maybe 10, 15, 20 years. So we started some of these getting into maybe somewhere 2005, 2006, we came up with 1 or 2 acts where AML and the other issues are highlighted, and we are getting into that particular streamline. Mind you, I think somewhere in 2015, we were grey listed as well. We had serious issues there. Definitely. So then the other one is the common general public, what amount of understanding when you go to the bank, when you ask for your the KYC, not the KYC form, you ask for what you do, how you earn your income. We are very reluctant to disclose all that. Absolutely. Why we are reluctant? There are issues that we are trying to mitigate our taxes and all the other kind of transparent issues. But on the top of it, we need to educate the people also. Why we need it? If we are going to get grey listed, if we are going to get blacklisted, that is the end of Sri Lanka. So even IMF and the ADB and World Bank also in this particular periphery of developing KYC, the anti-money laundering and combating the terrorism financing. So it's very important. But practically, if we feel maybe 1 or 2 organizations and the banking system, without giving that particular awareness, is a tough ask.
Absolutely. And then the fact that we have so many banks also means you can go to one that is less, less intrusive in your life. And maybe if you had less, now that's the case with Australia, you can't go anywhere else. You just have 4 banks and absolutely have to comply, right?
So if I just may add, if you don't mind. So recently Credit Suisse and so many big banks had issues, right? And even HSBC, Standard Chartered of this world have had the biggest fines.
Yeah, the Credit Suisse chairman and CEO has been thrown out after 20 odd years.
Exactly. So I think what has happened is this is like a tick box approach. I think by banks, we are like ticking a box and trying to appease the regulator, saying we are doing it right. So I think it has to be more dynamic. And then I think there has to be more information sharing, maybe through central banks. I don't know, but there is customer confidentiality.
Yeah.
So easier said than done. Like
Absolutely.
Your KYC details can we share? So that's a question. It needs to be more dynamic. It means people are talking about doing it through AI and robotics to see customer behavior, rather than just ticking a box. And as Buddhi said, you just ask what is your profession and how much will come through your account, and then that's filed away. So it has to be more dynamic, and you have to see customers' behavior patterns in a more automated way. Then otherwise, it's.
I think it's a nice segue to the next segment. I want to get your opinion, all three of you. Look, I think finance is being revolutionized globally through digital. But unlike other industries, the issue with using digital in financial services or banking is also the fact that you all have much higher levels of regulation. Right? That's why I get frustration from IT, BPM CEOs who come and tell me how bad the banking system is and how much they can do. But they are obviously not regulated. Well, they are not regulated at all. But in terms of financial services, you have regulations and also data protection and so on. But we really need to harness the potential of digital. How are we to do this?
I mean, I'm not a
You
banking.
have a blank, but you have a blank canvas at the Port
I'm
City.
not a banker, but what I can tell you is that I guess if any positives that COVID has brought us is really moving faster than we planned for digitization.
Absolutely.
And I feel digital finance or fintech is really the way to go, because most of now, especially in Sri Lankan banks, our cost structures are quite high. Cost to income is quite high, NIMs are shrinking, right? I actually looked at some time ago how many bank branches we have in totality is much more than Cargills and Keels put together. Okay, so I feel...
And the ATM network, multiple banks have ATMs so close to each other, it makes no sense.
Yeah, so I guess better if you're looking from a customer perspective to reach to the customer, and more inclusive financing is, I think, more digitization is better. But honestly, I personally don't still see many meaningful steps being taken by some of these banks based on my personal interaction with my bank.
Quite indictment on the on you all, but you all are taking initiatives, and I can see that, and I think.
So you still go to a bank or what?
Sorry?
You still go to a bank branch?
No, I don't.
Yeah. Rest my case.
I think maybe one of the other issues as far as the privacy is concerned, and then there again confidentiality is concerned, then there again the protection as well as cyber attacks and those kind of issues, still people are having certain issues in their mind. But as far as the banks are concerned, specifically when it comes to not only the private sector, even the SOEs, government sector banks also, they have come up with so many products and so many the alternative ways of tackling this issue. But there again, overarching issue is going to be when it comes to maybe like compared to India, when you have Adan or whatever you call it, then your information is anyway captured, and you have your information captured to Inland Revenue or maybe certain other authorities. Why, when you don't have that kind of phenomena in place, where you produce some kind of set of accounts, where you produce some kind of income statements, then even for KYC to come in place, those are issues. So if you have this particular transparency, and if the infrastructure is developed to capture some of these, I think within seconds we'll prosper.
To add to that, the credit profiling.
Yes.
Whether I walk into a bank to get a loan or somebody else, there is no distinction. You have to follow the same process, the time frames taken. So if you can, through means of technology, capture some of these information, including my utility payment, billing, payment habits, all that, which is, then you can get a much better profile.
I think open banking is the way, and some
Yeah.
countries are moving towards that. Go ahead.
So exactly what I was going to say, there is huge opportunity. I think for basic digital channels went up exponentially during COVID. So everybody had to use it. So, but there is much more to it. So customer insights, every other industry, I think the financial services industry is very slow at that. Every other, whether it's supermarkets, pharmacies, clothes, retail, basically they are catering to each individual customer based on their behavior.
Absolutely.
So as Thulci says, if he is spending a little more on his card and he's repaying 100%, then we should automatically sell him various other products. He's credit worthy, right?
Because I think with his case, it's he's paid very well, so he should be offering
Exactly.
much better services.
So you should be, you're going to improve the customer experience in such a great way with AI and analytics. So I think that's the opportunity. For banks, I think we need to work closely together with fintechs because the investment is quite high, so we don't need to do everything ourselves. I think partnerships with fintechs or with telcos or whatever is a great opportunity. I think there is no other way to go because otherwise we are going to get left behind. And I think we have to entirely change the operating model for banks because it's, as he said, it's not going to be bricks and mortar anymore.
Absolutely.
And how we do that in an effective manner to cater to every person in the ecosystem. So
And there's going to be competition. When Port City is created, my point is there will be international banks.
And also hopefully virtual banks, completely virtual, neobanks as we call them.
Or in Singapore they have. So we need to, and also be part of that whole development of Port City at today's cost. Just for the brick and mortar construction is $15 billion. So at the moment, none of the local banks individually or even concerned because you will reach your single borrower limits, etc., etc. So this is a huge opportunity coming. It's a question of how you kind of prepare. Otherwise, majority of that slice of the share would be taken by international
bringing
banks.
competition and best practices.
Absolutely. And in your own country, on the doorstep of it, you will have other banks, global banks do really well. So.
Because a fintech can give you a loan in 5 minutes.
Exactly.
They have all
Less.
the credit. Right, they have a different way of
Absolutely.
assessing you. They have credit data. They have your spending data.
I was told, they could make a decision within 20 seconds of
So
giving
banks
you
are
subsidy.
taking like 1 week.
Some of these are kind of pretty much automated as well. They are again some of the credit decisions what we have maybe about 10 years back in other markets. How can we assign responsibility for the credit decisions because those are automated. Even sometimes when it comes to even some analysis, say for example some of these the funds where they do read the annual reports by themselves and come up with their credit evaluation. That also happened maybe about 5 years ago, even more than that. Now the issue is the transparency of all that, and there again I'm going to emphasize the fact that the implementation of the law and they are again capturing data as far as the expenditure patterns are concerned. If you are going to have strict regulations, where not only will give you nothing finally, I mean, so it's cumbersome as well as it's only one particular part of the equation. So all that, if it is going to get captured, your income is going to captured like what most of the countries, including the neighboring India, also having. We need to have transparency in all that. Then there again on the top of it, like when you look at, even though my not really Thulci is the expert in the area, but there again, for finance center to develop, hub to develop, you need to have certain other peripheral infrastructure. Absolutely. As well as specifically head offices of the most of the organizations also should come down here. And then we need to get connected to the global value chain as well. That's where Aruni also mentioned very clearly, given some of these circumstances might prevent us from going over there, but still maybe the human capital, as you correctly said, Thulci, we might be able to still give it a try.
Absolutely.
Since the country is whatever, and we can't be keeping away from that, we need to try it out. And as well as like Imran, like you coming down here to working the port city. So why don't we explore those kind of opportunities purely based on the human capital as well?
Absolutely. And just to add, go ahead.
Sorry, no, I would just want to touch on that. Plus, what Aruni said before, I understand the country is going through a challenging times. With an IMF program coming on board, I'm sure fiscal consolidation being on the top, more on the revenue side, taxes, all that. The question is fiscal consolidation versus economic growth. We have to strike the right balance, right? Why I feel is if you get the Port City proposition right in an AZZ ring-fenced area, that can be that catalyst to drive growth, because the positioning of Port City is not to cater for a 22 million population.
Yes, it's very
we
clear.
are trying
value
to
proposition.
create a platform for regional businesses, banks to come and set up in Port City to do business elsewhere. Can we be that missing piece in South Asia as an IFC, which you don't have?
We
at the
don't.
moment,
We
you
don't.
know. A gift
It's clear.
city,
It's clear.
was established as a result of a 2005 AZZ law in India. It's not a success. 15 years down, they had
In Gujarat, right?
yeah, Gujarat International Financial and Tech City. So 2005, they've set up. Their issue was they didn't have an independent regulator. So the Reserve Bank of India, the pensions regulator, the insurance regulator, all had jurisdiction there. Can you imagine? That never worked. And only recently, after 15 years, they have taken time to realize they have a unified one apex regulator called International Financial Services Center Authority, which all of these regulators now come together and they are making some inroads. So similarly, the point is, if you can, under these current situations, because you're bringing foreign currency to the country.
Absolutely.
Offshore, under the banking offshore rules, we are saying, look, your bank accounts are secure, your funds are secure. This is where the regulations will come into play to give the confidence. And you can do business elsewhere. Intervention from the central bank in terms of capital current control will not be there, because these funds were never there in your abroad. So long as those are very clearly put down, but I agree with Arun. Look, ring fencing is one, but political stability is a must.
Absolutely.
And also the reputation and that country,
Trust.
we need to build that. It'll take time.
But then also one of the failures also of the Gujarat model is because there's a lot of political tension between India and Pakistan and Bangladesh and India. So I think Sri Lanka is a neutral country and relatively a good
Absolutely.
friend of
We
everybody.
can cater to SAARC region. No?
But ultimately, it's still Sri Lankans who are going to be running this place. So we have to prove in some way that we are reliable, we are transparent, we are trustworthy,
Absolutely.
and we are consistent.
Absolutely.
So that's what I'm saying. We have to sort of show that.
Prove. And that'll evolve. Yeah.
Coming to you are president of the ACC Sri Lanka division and you have
Immediate past president.
Immediate past president. I'm sorry. Look, auditing is a critical component, and I think and technology is becoming a great player in this as well. Hopefully, auditing we can leapfrog some of the processes by using technology, and hopefully become one of the leading hubs of this region in terms of auditing our banks, and maybe you can even help others in the region as well. What are your thoughts on that?
I think when it comes to specifically auditing and automation and those kind of aspects, quite interestingly, maybe about 2-3 years back, American Accounting Association is very well known, more than 100 years, where they came up with a research where they feel the best players in the automation and not really AI, but the automation and the accounting kind of related area, who are the bigger players? Top 3 or 4 accounting firms, not even the people who are in business or no banks as well. So they can add a lot of value, and when they come to external audit, also they come up with a lot of the tools that they can use. They look at so many inside information even though those are not in public domain at all, but they use it for their auditing purposes to identify maybe risk elevated areas, the early warning signals, then the maybe fraud and those kind of malpractices. Then they decide through those kind of using those kind of analytical tools, they just look at what are the areas they need to do much more emphasis on. They do quite a lot in that area. I think our issue is data protection and those kind of acts and those kind of conundrum that we engulf in. So sometimes it's going to be a bit difficult for us to maybe replicate what they have been doing. But I think there are the external expertise now. When it comes to local banks, unfortunately, we are bogged down in 1 or 2 or 3, 4 countries. These guys, when they are running in maybe more than 120 countries and then gaining the experiences, I don't like to name the firms. It's going to be bad. So because of that, I mean, they have done so many wonders when it comes to leasing and new leasing thing came up, and they do a lot of collaboration, and they come up with a lot of AI and automation type of solutions. I think auditing area, they to a certain limited way that they have been adding a lot of value, and sometimes they come up with revelations at the board audit committees and board risk committees, specifically board audit committee. They come up and they talk about a lot of things which really can add value. So maybe piggybacking on some of these, I think if we meaningfully use it, it's going to be very much relevant not only for auditing but even the business context and the strategy as well. That's what I feel.
Excellent. Arun, you have a background in risk management. I really want to ask you on this. Look, we've gone through a lot. This is under tax. Then we've had the whole COVID. Now we have economic crisis. How robust is our risk management framework within our banking system? Is there anything that we can work on in that respect?
So as I said before, I think our regulation is quite advanced in the sense that the framework is good. So and it's paying off now. In fact, because our banks, financial services sector and the banks have been quite resilient through trying times. Now we are being tested to the maximum right now. So we've never been in this situation, but we started Basel III early in 2013. Then we were implemented much to everybody. The whole business community was saying IFRS 9 is too early. But we implemented that. So we started looking at expected loss rather than incurred loss, which resulted in higher impairments. Due to this regulation and control, so there was liquidity caps, there are foreign currency borrowing caps. So all those things in terms of principle-based things, all the right thing, which is now paying off. If you look at the banks, well capitalized, right? Except dollar liquidity is a country issue, but other than that, quite liquid. And the DSIBs, as you call it, the systemically important banks are very robust in terms of all metrics, right? That is possibly going to change because of the severe stress now. So I think the regulation has been pretty strong, which has put us in good stead. And then if you look at the governance structure in banks, there is an integrated risk management framework. So we operate within that. We try to identify various different risks, one morphing into another. We have a risk appetite at the very top. Then we have risk limits. Then we have individual operating limits. So all that is managed, and there is oversight from the board risk committee. And the chief risk officer in a bank reports directly into the board risk committee. So there is independence. So all that is quite robustly implemented by the central bank also. There is a supervisory review process. There is an ICAP process where you do your capital assessment. There is a stress testing within that, right? So we do all these things right, which has benefited us and managed to keep us profitable, right? All this. But now this year, I would say that these are lots of things beyond sort of our control, and
It's a macro problem.
yeah, it's a macro issue, and which we couldn't have safeguarded for some of these risks because we didn't see this reserve issue coming to such a level, or the exchange rate, interest rates being hiked overnight. So all these things have come. I wouldn't say it's a surprise, but it's come exponentially. It's gone up. It's not at moderate levels. So in that sense, I think it is a very tough year. But I think it's a manageable level because of the regulation and how we've operated and how we built up the capacity.
Excellent. We're almost out of time, but there's one question that I want to get the views of all three of you, and that is on financial inclusion, which is very, very important to keep social stability, in any society. We were the leading country in South Asia. ADB report, ADB has looked at it and they've seen that we were the leading country in South Asia, but obviously we've been hit by two to three different crises, one after the other. And there's a risk, that we go back on this financial inclusion, and that will create a lot of problems in society, I feel. How do you make sure that we don't backslide on the gains we made on financial inclusion?
Yeah, Ibrahim, there again, I think when we look at the finance, we should not really restrict ourselves to the banking system per se. Now, when we look at maybe, I always say this particular thing, maybe not really good kind of comparison, but market cap as a percentage of GDP in India is running into 79-80% or more than that. Our market cap to GDP is running into about 20% or less than that. So we need to have other financial markets also in place. And there again, the angels, the venture capitals and others, those components, looking at maybe a bit beyond the banking sector, having a different risk appetite. Those are very, very important and the essential elements for the finance sector to develop. We should never think that those kind of IPOs coming in and all those kind of are going to eat into the banking sector. No, that's a kind of a development of the banking sector. We should really develop together. And maybe when you look at, even though it was said that we are financially inclusive, financial inclusion is high, still I think we need to get certain examples from neighboring countries, including Bangladesh and other places as well. So we need to be kind of very much open in our eyes, as well as not only looking at simply the banking sector, we need to look at other parts of the financial market also. Maybe at one small thing to what Arun said, that normally, yes, we are very good in doing our risks, and we are having the governance structure there. But unfortunate thing is, we never thought that our exchange rate is going to get depreciated by 40, 50, 60, 70, 80% overnight, or maybe within 3 months. And then we never expected our interest rate from 7% to run into 32%. So then those kind of maybe the black zone is going to be very, very difficult to tackle sometimes. So those issues also should be bear in mind when we look at sometimes this kind of high interest rates a couple of times in our life we have gone through. Can you remember?
80s.
Maybe about 25 years back we have gone through similar kind of thing. And then I was sitting other side of the equation, and we were fighting with each other. So time to time we come into this, and we need to be mindful of the fact that developed markets, I can remember maybe about 4 years back or 5 years back, maybe some internal document is what they say is if interest rate is going to get doubled, then they were talking about 3% to 4% or something, 5% or something. The NPA, they are using empirical data. What they say is NPA is going to be double. So that is increase of 2-3% in those markets. Ours increase of maybe from 7-8% to 2%. What we can expect. So those are the things need to be a bit mindful as well.
Sure. Arun, Thulci?
I have a different perspective on this. I'm not too sure when you say financial inclusion, what exactly the definition of it, because if you
look access to different way,
methods so if you look at access to credit, if you look at doing business, World Bank, I know it's discontinued now. Last when I looked at it, we ranked about 132 or 34 out of 190 countries. And India is 25, for instance. Cambodia, which ranks about 140 or 44 in doing business, they rank 25 in access to credit.
And Sri Lankan companies are leading in players in the Cambodian market.
Right.
Yeah.
And even in, if you compare Pakistan and Bangladesh, still they rank higher in terms of access to credit, right? So the question is, my personal opinion is that, especially after the end of the war, where we want to really drive economic growth, I felt the financial institutions didn't really support that growth. That because supporting entrepreneurship and SMEs is a must. We have about a 65-70% informal sector. So again, I kind of beg to differ. We are financially inclusive for these reasons.
I think we were a few years back.
And if you really look at the lending side, how do you create capital formation without really giving due access to credit? And I feel banks can do a lot more. And I agree with you that we need to look at beyond typical conventional banking finance. Not to get just asset-backed lending, but private equity, venture capitals coming in, corporate coming into this. Then only you can broaden that. You will give much more opportunity for borrowing and businesses to grow.
No, Thulci, to add to what you said, Thulci, I can remember one of the professors who left the country longer time ago when he was here somewhere 95, as I can remember. He did, now he's in US, and he did some research where he found about 20-30 odd IPOs coming through. So where we are there later on, why those channels kind of dried off. There again, international experience always shows that the other contemporary, other kind of avenues also should come into the market and play their role also, because we are taking deposits from so many people and lending it out. Then our risk appetites are fairly different, and specifically the interest of the depositor, where a couple of millions of people are depositing with
so you have a fiduciary duty there.
The HNB and commercial, we have a couple of millions of depositors, and all those are not kind of very rich and wealthy people, and they don't have that particular risk appetite as well. So then we need to really develop other markets, and I think the CAC and SEC, I don't know, they have been trying their level best for so many decades.
So I think we can do much more. Both are right actually, because there is an informal sector, formal sector, and a semi-formal sector. So we need to bring that all under the regulation and CRIP, and so that we have data so that we can lend. But I agree we have to do a different kind of lending for these guys. We can't sort of, banks can't analyze them the same way that we do people who have balance sheets and all that. So we are trying to do that kind of lending. So it's too stringent for this kind of category. But to support that, Thulci, you need a credit information bureau. You need other data, digital, where you can identify people, where you can identify their total debt, because we don't know where they have borrowed.
Absolutely.
Right? Their debt burden. So all those things as a need, and you need a sort of the regulatory environment. So and he's right, you have to bring all these people together. I think they're all helping, but to ensure that customers are treated fairly, not overcharged, because we also need these other players, because for us it's a huge cost to go to these guys, right? It's a huge cost, but community-based lending and all is not such a big cost.
Absolutely.
Right, but we need to also find digital channels, etc. So also, like in Singapore, there are insurance schemes, etc., credit insurance schemes where initially the government there's an insurance scheme which takes 75% of the risk, and then the banks take 25%. As the company grows, then we will take more risk. So all those schemes are there in a holistic manner, for instance, in Singapore. But here it's sort of ad hoc. So anyway, I think you need to finish.
Yes, exactly.
Yeah.
And I think we're out of time. It's a fascinating chat, a really fascinating chat. And on behalf of the Frederick Naumann Foundation for Freedom and Economics, let me thank you to our panelists. And to our viewer, please join us on another episode where we look at the shared values between Europe and Sri Lanka. And join us for another part of this series in Reshape Europe 2022. Thank you.